those questions forward to the management. ET Now's Neeraj Shah caught up with them in Pune and began by asking them what the coming quarters were looking like.
We see much greater level of interest from most of our clients. Most of the telecommunication companies, as you know, are under pressure because ARPUs are coming down. But despite that, there is expansion. They are seeking cost reductions in their platforms in which we can assist. The new competition is coming in, where again we are there. So net, I see a much greater level of activity now than it was, say, 2 quarters ago.
And would that reflect in the deal pipeline as well? You've added 7 new clients in the quarter gone by. So would that reflect in the deal pipeline as well?
I believe so. And that is why you are seeing much greater growth in what we call the rest of the world. That means it excludes Europe and it excludes US. Sequential growth was 34% in this segment, in this area, as against 4% in other areas. So you can see the disequilibrium which is coming in demand. Obviously it was at a smaller base, but nonetheless you are seeing growth.
Would it be volume led or would it be pricing led? I'm guessing there is not too much of pricing power right now, so I'm guessing it will essentially be a volumes game.
I think prices kind of more or less have stabilized. The kind of pressure we saw for reduction of prices last year, that they're not there. It is kind of stabilizing, and so it is going to be basically giving value to the customer, how we can reduce the kind of a cost of running IT. And more customers are now talking about how you can be my business solution partner, how we can help me to actually improve my top line, so that the customer churn management and their value-added services where they can get additional revenues in our space, those things are becoming important. So not only that as a supplier of IT, I can reduce the operating costs for my customers, how I can help them to actually retain customers and improve basically their customer satisfaction, etc.
Alright, and Sanjay, what would help you maintain, enhance, improve upon the margin picture in the quarters ahead?
So let me kind of summarize quickly the results for you. Okay, you mentioned 35% sequential growth. I think within that we must understand that during this quarter we had around $64 million of revenue, which is basically the build phase of a build to managed service, large engagement with a customer. If you exclude that, we had very good revenue growth, about 9%. That is underpinned by about 4.5% volume growth, and we had some benefits from currency as well. On the EBITDA margins this quarter, we have had a 300 basis point improvement over last quarter. This is of course again excluding that large lumpy revenue. This has happened in a quarter where we've taken salary hikes for a substantial number of our people, and benefits on margin have come from 3 key factors. One is that utilization has improved from 69 to 75%. Currencies have been supportive to margins this quarter, and thirdly, SG&A leverage has improved, and therefore our SG&A percentage has gone down. As we we don't give guidance for the future, but you know the factors which there are factors to which are negative to margins, and there are opportunities to improve margin. As always, where margins rest in the future will depend on how these balance out, and one of the biggest imponderables is where currency itself is going to settle down. Sure. It is so volatile and it has a dramatic impact on our business.
So it does. Okay, I'll probe that a little bit further, but we need one worry would be the attrition levels. I mean, we've talked about it quarter after quarter. It doesn't seem to be improving.
Yeah, it's not improving, and it is a huge worry to us. It's expensive, and it causes many complications, issues in terms of delivery. When we lose the right expertise, then we have to go looking out for it. One, the market has turned. 2, telecom sector comes for a real heart beating because that is where considerable expansion is taking place in India. And new service providers are coming in, not only here but in Asia. So we are the largest in telecom. That's all we do. So we become a natural hunting ground. Right. So we are now thinking of doing various things which include retention bonuses, etc., etc. And hopefully it will come down.
Okay, there you go. The Tech Mahindra management speaking to ET Now.